Hello students, what are we going to study today? We are going to study what is GST, what are the benefits of GST, what is the extent and commencement of GST, then what is a conceptual framework, and last topic will be which are the texts which are subsumed after the introduction of GST. So when I talk about what does GST means, GST is being applicable on supply of goods and services within India for consideration. It means a tax which is being levied on final consumer. It is a value added tax. I will tell you with the help of an example. So if you see the PPT, you will come to know in PPT we have manufacturer. The manufacturer has purchased it for 100 rupees and he is selling it for 120 rupees. So he has add on a profit of rupees 20. So GST is to be paid only on 20 rupees. So when I say GST is a value added tax, it means I am going to pay tax only on the value addition. This means I am not going to pay tax on the whole 150 rupees. I am going to pay only on the value addition done by me, that is 20 rupees. When the distributor collected it for 120 rupees and he is selling it for 150 rupees. So how much profit he is earning? 30 rupees. He is going to pay tax only on 30 rupees. So this is the first topic which I am going to cover, that is value addition tax. GST is a tax which is being paid only on the value addition done by the supplier. This is the first thing. Second topic which we have is continuous chain of tax credit. So if you see in this example, manufacturer, distributor, wholesaler, retailer, everyone is being included. So it is a continuous chain of credit. No one has been escaped. No one has been denied, about it. Then burden is borne by the final consumer. So if you see the third table, that means manufacturer is paying 2 rupees, distributor collected 5 rupees, but he has already paid 2 rupees to manufacturer, so he will be paying only 3 rupees to government, Then when you talk about wholesaler, how much did he collect? He collected 7 rupees, but he has already paid 5 rupees to the distributor, so how much he is going to pay to the government? 2 rupees. When you talk about retailer is collecting 10 rupees, but he's already paid 7 rupees, so he is going to pay 3 rupees to government. When you talk about the consumer, how much has he paid? 10 rupees. That is 2 rupees of manufacturer, 3 rupees of distributor, 2 rupees of wholesaler, and 3 rupees of retailer. So who is borning it? It's been borne by the final consumer. The whole 10 rupees of GST, out of which was being breaked into parts, which was being paid by manufacturer, distributor, wholesaler, and retailer, is being borne by the final consumer. Then, when I talk about no cascading effect, what does it mean when I talk about no cascading effect? It means there is no tax on tax. It is a universal rule that you cannot pay tax on tax. But this universal rule has some proviso to it. That we are not going to discuss, but it is a universal rule that you cannot pay tax on tax. Say for example, if the consumer, he is paying tax, he is paying GST only on 30 rupees. The retailer has purchased it for 170 and selling it for 200 rupees. So the consumer is paying GST only on 30 rupees. No doubt, when you club, he is paying 10 rupees as GST, but the add-on GST is being charged only on 30 rupees. Now GST is a destination and consumption based tax. What does it mean? It means as soon as a destination changes of the goods or service, then only you have to pay GST. This means when I say destination, it doesn't mean that it should be shifted from one department to another. It means it should be shifted from one person to another. Consumption means you should consume. And until you do not consume the goods and services, can you pay GST? No, you cannot pay GST. Now let us talk about the benefits of GST. What are the various benefits of GST? The first benefit is there was a need for GST because in the current tax structure, when you go to restaurant, you order a dish, you are consuming goods and services of the staff, of the chef, of the waiters. So that's why we used to pay VAT at the rate 12% and VAT at the rate 5% and service tax at the rate 12%. So how much we were paying? 17% in totality. But now, when you talk about when you go to restaurant with the introduction of GST, what do you have to pay? Only 5%. Do you get the benefit of the same? Yes, you get the benefit of the same if you are using it for professional purpose and not personal purpose. Now what is the next benefit? It is a cure for all the inlets. For all the inlets means for the existing tax structure, the tax framework, where we had excise duty, where we had VAT, where we had sales tax, where we had service tax, which was so different from each other that the layman would not be able to understand. It is your job also, and you have to study VAT, service tax, excise, everything. Now you have to study just one tax, GST. So now what is the other benefit? It creates economy, obviously, free flow of goods, boost Make in India initiative. How it happens? See, when I talk about GST, goods and service tax, the tax rates are being reduced. So it helps me to save more and invest more money in the production and in the purchasing department. There's also one more thing. When I talk about GST, it creates a unified national market. Why? Because it's a universal rate all over India. If I say 5% GST has been applicable on restaurant service, this has been applicable all over India, right from Jammu Kashmir to Kanyakumari. Okay? So what is the benefit? The benefit is if I want to open an industry, I can open it anywhere. Earlier, what happened? Before the introduction of GST, there was VAT. VAT means value added tax. It was being state-wise. It was a state tax. Okay? Now what happened? Every state has to apply different rates of tax. So in Mumbai, the VAT was less. So that's why people used to grow more in Mumbai. What happened? This led to concession in Mumbai. And there was regional imbalance. Regional imbalance means some of the states grow and prosper a lot. Some of the states lag behind. Because of GST, there will be a unified national market. It boosts Make in India initiative, enhance investment and employment. Obviously, if you invest more, you create more employment opportunity. Simplified tax structure, yes. Goods and service tax, just one tax to learn and understand. Easy tax compliance, very easy. Monthly returns you have to pay. You can also file your returns on mobile phones. Currently, due to COVID, we were being given this benefit. Okay? Advantages to all, win-win situation both for the consumer and for the seller. Right? Seamless flow of credit. Even if I'm providing service, I can take benefit of the goods purchased or used for professional purpose. Okay? Now, what are we going to study? We are going to study the next topic, that is extent and commencement. So GST is applicable to whole of India, including Jammu and Kashmir. When I say whole of India, above and below the sea level, all the territorial waters are being included. How far it has been expanded? It has been expanded up to 200 nautical miles. 200 nautical miles means what? Any transaction which has been done in water, which is 200 nautical miles far from the land of India, then you have to pay GST on the same. Okay? But what does it exclude? It excludes SEZ units. Any transaction done in SEZ units, okay, is not being clubbed under the ambit of GST. So say for example, I'm selling goods in special economic zones. Do I have to pay GST? No, I don't have to pay. Inland container deposit, custom areas and custom warehouses. So any transaction done in custom areas, do I have to pay GST? No, I don't have to pay. But if I'm removing goods from SEZ into the territorial limits of India, that means SEZ, I'm bringing it to Maharashtra. Say for example, Silvassa is a SEZ area. I'm bringing it into Mumbai. Do I have to pay GST? Yes. Why? Because what did I say? GST is a destination-based tax. If the destination changes, I have to pay GST. Okay? So this is what when I talk about the extent and commencement of GST. Applicable to whole of India, above the sea level, below the sea level, above the surface, up to 200 nautical miles of territorial limits. But do not include SEZ, custom area. Now what are we going to study? We are going to study conceptual framework. When I talk about conceptual framework, what do I mean? It means GST is a destination-based tax. Okay? So we have to understand GST is a dual model tax in India. That means both the central and the state levy GST in India. Okay? So there are 4 types of GST: C, S, UT and IGST. C means central goods and service tax. S means state goods and service tax. I means integrated goods and service tax. UT means union territory goods and service tax. C is being implied by central. State impose SGST. Union territories impose UT, and integrated goods and service tax, it is being imposed by central. If you pay IGST, it is being consumed by central government. Okay. So when I say conceptual framework, it means what? If there is an intra-state transaction, okay, then what do we pay? Either we pay CGST and SGST or UT GST. So if the transaction is being completed in a state, we pay SGST. But if it has been completed in a union territory, we pay UTGST. Okay, what do I mean? I mean if the goods are being transferred from Mumbai to Kolhapur, so both of them fall under the same states, right? So in this case, what am I going to pay? I'm going to pay C and S, CGST and SGST. Now say for example, if the goods are being sold within Pondicherry. Pondicherry is a union territory as per GST Act. Okay. So if the goods are being sold in Pondicherry, what am I going to pay? CGST and UTGST. Okay. So this is called intrastate transaction, where only one state or one union territory is in. Now when I say interstate transaction, what do I pay? I pay only IGST. IGST means Integrated Goods and Service Tax. What does it mean? It means two states are in. Okay. Or two union territories, or one state or one union territory. This means what? Goods are being sold from Mumbai to Chennai. Which are the two states which are involved here? Maharashtra, right? And the second one, when I say about Chennai, it's Tamil Nadu. So what are we going to pay? We are going to pay only and only IGST. Now say for example, goods are being sold from Hyderabad to Pondicherry. Pondicherry is a union territory and Hyderabad is in Telangana, right? So one state and one union territory. What are we going to pay? IGST. Now say for example, two union territories are Chandigarh to Lakshadweep. Chandigarh is a union territory as per GST. Okay. So Chandigarh to Lakshadweep Island. What are we going to pay? IGST, Integrated Goods and Service Tax. So when I say conceptual framework, what am I trying to explain? I am trying to explain that in India we are following dual model. Dual model means what? GST is being paid only when we consume a particular good or services. But this GST is being earned by both the central and the state government. Okay. So for that we have a dual model concept, that is IGST and CGST, SGST or UTGST. Okay. Hopefully you understood this. Now let us go to the next topic. Tax subsum after introduction of GST. So which are the tax which are being subsum after introduction of GST? Almost all of them. Excise, central, sales, service, ad hoc excise duty, entertainment tax, state charges, tax on lottery, betting, gambling, entry tax, luxury tax, all of them are being subsum. What do subsum? When I say subsum, what do I mean? I mean the tax are no more levied. Okay, they are being cancelled, scrapped. So in layman language we say cancel and scrap, but in tax terminology what do we say? Subsum. Okay, it's a legal word. Hopefully you understood the topics. So we covered all the topics, that is what is GST, what are the benefits, what is the extent and commencement, conceptual framework and tax subsum after introduction of GST. Okay, thank you very much.